It's a little bit warm here, but get the AC going there.
All right, good morning, everybody. Fired up for an exciting day. Okay. Started out with last night's session in the States, very strong. First really strong session we've seen since the couple of shaky days that we've had last week. We did spend kind of Thursday and Friday, I think, consolidating a little bit and maybe building a base. The market tried to break down a little bit further, couldn't do it. Nice reversal day yesterday, and taking us back, I wouldn't say close to the highs, but taking us back up close to 21,000. Nice bounce there, well over 1% on the NASDAQ, well over 1% on the S&P. What was the leadership on the day? I don't really know of anything that was there to give us the leadership for the update. I think it was just a bit of, the market had tried to come down again Thursday, Friday, couldn't do it, and so we had a nice reversal day there yesterday. Maybe a little bit of calming of some of the tensions in the Middle East. I'm not really sure, but either way, the market a nice rally yesterday. We'll have to see if we can get some follow through in today's session. Right now, we're looking at S&Ps down about 5.5 points on the open, but maybe still just a bit of a small correction after such a run yesterday. All right, if we look in the Asian session, we can see we're up across the board except for the Nikkei, which is actually quite surprising because we moved back through the 120 level on the yen US dollar cross. It's funny that was a bit of an outlier, but all the rest of the markets up nicely. Australia actually up nicely, resources up. I think a little bit of a follow through after the People's Bank of China announcing a decrease in the minimum home down payment, and also obviously talks of the stimulus or lack of growth rate and the potential that they could intervene yesterday. So other than that, same thing. Very little leadership. We keep kind of, every day coming into the market waiting for some sort of indication of what we need to follow, what we need to be looking at. We've been talking about the dollar and the U.S. 10-year. As far as I know, still the two biggest things that we need to be watching in the market at the moment. And until something changes, we'll be watching that, but we'll keep you posted if we think that leadership is changing. All right, looking at market data today, we've got German unemployment change at 9:55. We've got GDP out of the UK at 10:30. We've got CPI estimate year on year in Eurozone at 11. We've got the trade balance at 2 here locally, and then in the States we've got Chicago Purchasing Managers numbers as well as the Consumer Confidence Index. All right, let's get into the maps. First thing that we want to look at here, well, I think it's important to note that today is quarter end, and there's a potential there to see some window dressing, not only here but kind of around the globe. Doesn't necessarily mean that that's going to happen. Hasn't been a great month. I think globally, outside of Europe. I mean, Europe's been a ridiculous month, especially in Germany and some of the other, Italy and that. But maybe a kind of a poor quarter out of the S&P, poor quarter here locally. So it definitely could be a little bit of window dressing today, so keep your eye out for that, especially maybe into the auction. One of the first things that we'll look at here this morning is the German DAX, which yesterday broke out of a beautiful flag pattern. So we've had just a ridiculous run in the DAX. I mean, going back to October of last year, we traded at 8,353. We are trading over 12,000 right now. So, the market's up roughly 33%. That's almost more. I mean, sorry, from 8,300. We're looking at 50% from that point, which is just out of this world. So you got to put into context the rally that we've seen out of the DAX. How much more is meat's left on the bone? I don't know, but you step in front of it, you get your face ripped off. So just got to be careful to when you try to fade that thing. Anyway, right now breaking out of a nice flag, bull flag. It looks like we've got a higher target in store in the near term out of the DAX. Next thing we'll look at here is FirstRand. FirstRand here broke out again above. You can see this consolidation that we had up around the 55.25, 55.30 level. Broke out there nicely yesterday, and I don't think we've got a massive target here, but we broke out nonetheless. It's probably going to take us up into the 58s, somewhere along that level. Then this thing, just one rand pullbacks have pretty much been a sitter to buy, for the past year and a half. If we look at Remgro, we talked about this one the other day, coming into some support. We were really looking for it to get to our main support level, I think here, about 257, 258. We really only came down and tested, we got down to about 258 intraday. We came down and tested 260 nicely on the close. We had a nice reversal on Friday. Yesterday, we actually traded down and closed more or less at the lows, but you can see here we did kind of pop up and start to test the resistance on what's now also starting to shape up to be a bit of a bull flag. If we get a breakout here above 270, I really think this thing could trade up close to 300. So this could be a nice little opportunity here. If we continue to see a little bit of consolidation, as soon as we see a breakout, it could be a nice opportunity in Remgro to follow the pack here. Woolworths, I wanted to buy this so badly on the recent correction, but this chart just doesn't look great. For me, this still looks very much like a potential for a head and shoulder. You can see if we round it off here to the right at this level, it would be an incredible head and shoulder setup. But that being said, we can obviously, I think if we take out, this high, maybe 87 and a quarter. I think we need to get north of about 87 and a half to really start to. We need to close up there to shake off this this head and shoulder setup. So I wouldn't really feel comfortable buying this thing unless we got above maybe 87 and a half. Then I think potentially it could be worth a nibble. But as it sits right now, still looking a little bit too head and shoulderish for me. So just watch this level. Somewhere in this, somewhere over the next couple weeks, we'll probably have a nice breakout, and it could happen as early as today. Could be breaking out there to the upside. But bottom line is, until we can really push through that level, I think that we've got to be cautious that this thing doesn't turn into a bit of a head and shoulder. And then the last one I'll show is another retailer here. This is Foschini. The entire retailer sector was fantastic yesterday. Banks and retailers have just been an absolute star for the last couple of weeks for the most part. 180 here. We failed literally 10 times over the last 12 sessions in Foschini. It gets there every single day. Every single day it trades a little bit above, it seems like, and then it just can't do it. If we, you can see here on the wicks, pretty much 181's been the top. We get north of that, then I think you can probably call it a breakout even intraday. Anything above there, we'll be shaping up, and I think we've got a good run there. We're going to make a nice run probably to 200 if we break through that level. So watch 180 really, really closely. In order to start to actually say that this thing's going to fail, we probably need to see it drop below some sort of trend line like that. If we saw it drop that level, then we might be able to look at entering a short. But until then, I think we're going to watch this thing consolidate here. If it breaks through 180, it could be a great little risk reward on the long side to play it into 200. That's it for today, guys. Good luck out there.